Thanks for tuning in to this week's SoCal Multifamily Sales Pulse. The SoCal Multifamily Sales Pulse is a weekly blog post that reviews the past week's multifamily sales, stats, rents, absorption rate, and sale metrics for all 5 Southern California counties plus Long Beach. Make sure you're on my email list so you never miss the report. This week in What's Happening in the Market. With the Omicron variant seemingly starting to fade, here are 10 economic indicators to watch. Number 1, the pandemic. Rising vaccination and booster rates combined with a more transmissible and less severe strain may allow the pandemic to shift towards endemic in 2022. Number 2, the global supply chain. Supply chain pressures will ease as the pandemic recedes. Number 3, inflation inflection. Although current CPI inflation is running hot, current high rates are not expected to persist into the medium term, limiting pressure on long-term rates. Number 4 is GDP growth. Much of the strong economic growth being projected assumes the consumer is ready to unleash pent-up demand that has been accumulating throughout the pandemic. Number 5, industrial supply. Expect the industrial demand to boom and continue as construction deliveries are expected to surge in 2022. Number 6, multifamily household formation. Home prices and rents exist in equilibrium. Watch for home price growth to slow down while rent growth persists and accelerates in lagging markets. Number 7, investor diversification. Investors should be on the watch for a partial normalization of market activity. Number 8, sustainability shifting to the forefront. Stranded assets. We will start to see buildings that do not meet ESG requirements of investors or occupiers. The cost to retrofit some buildings will be too high to deliver value. Number 9 is confidence in the office market. Look for occupiers to lock in favorable terms for the long term before office fundamentals recover. Number 10, retail rebounding. Although the initial impact of the stimulus is behind us, households accumulated savings during the last 2 years to further support retail growth in 2022. The pulse of the market. As expected, listing inventory has seen a very slight increase since the end of last year. Well-priced and desirable properties are still selling quickly and with multiple offers, sometimes at full price or even over the asking price. The average days on market in most areas is still low, averaging around 30 to 45 days. What to expect? We should see inventory continue to increase throughout the first half of 2022, although I'm not expecting a huge increase. The demand is still too strong from investors and vacancy factors are still low. The big question is evictions and how long it will take the courts to get through the backlog of cases. With some eviction protections still in place, these protections could extend the problem longer. Buyers don't want to purchase a building that has tenants that aren't paying, and you can't blame them. So that wraps up another week of the SoCal Multifamily Sales Pulse. You can look at all the charts and stats in detail and at your leisure in the full report on my website, MikeLembeck.com. Feel free to give me a call or shoot me an email with any questions on the market, or if you're looking at acquiring more units or selling a property you currently own. And don't forget to subscribe to my YouTube channel, Mike's Multifamily Minutes, so you never miss a video. See you next week.